Hello and welcome to AI Market News by LM. All right, we've got a lot to cover today. First, we'll get a quick snapshot of where the markets are right now. Then we're diving deep into the huge geopolitical stories that are making waves. We'll also check in on the tech sector's mood, try to figure out what the Fed is thinking, and then wrap up by looking at the key data coming our way.
So first up, let's take a look at today's market snapshot. Right off the bat, we're seeing a really mixed bag out there, with the market telling a few different stories all at once.
Okay, as of early this morning, US time, US equity futures are kind of all over the place. The Dow is just barely hanging on to a gain, but the S&P 500 and the Nasdaq are both in the red. But honestly, the real story here, the thing that jumps off the page, is crude oil. It's down nearly 1.5%, and that is a huge move that tells us we need to look at the bigger picture.
Yeah, that big drop in oil, it's definitely not happening in a vacuum. It is directly tied to some major geopolitical moves that are sending some pretty serious ripples across the entire global market.
So the number one reason for that slide in crude prices is a shocking announcement involving the United States and Venezuela. This thing really came out of left field, and it had an immediate, dramatic impact on the energy markets. So the deal has Venezuela agreeing to turn over a huge amount of oil. But, and this is a big but, it comes with some serious strings attached. Washington is apparently demanding that Caracas completely cut its ties with China, Russia, and Iran. I mean, that's a massive political shift. Okay, so what does this actually mean for the global supply of oil? 50 million barrels sounds like a ton, right? Well, the immediate effect is, you guessed it, a lot more complicated than that headline makes it seem. Here's the deal. Venezuela can't just flip a switch and pump out more oil. Its current production is pretty low, and analysts figure it would take something like $10 billion a year for 10 years straight just to get its infrastructure back to where it used to be. On top of that, the global market is, and I'm quoting here, awash with crude, so big buyers like China can probably just get their oil from somewhere else to avoid all this geopolitical drama. Now, the other major story that's got the market on edge is brewing over in Asia. Tensions between China and Japan are really heating up, and that's creating a whole new layer of uncertainty for the region. We're looking at a classic tit-for-tat situation here. It seems that after some comments from Japan's prime minister about Taiwan, Beijing fired back with these sweeping export controls. Japan, of course, called this absolutely unacceptable and could hit back where it would really hurt: semiconductors. Japan is a powerhouse in that supply chain, and any restrictions could seriously mess with China's tech ambitions. All this friction is already dragging down the Nikkei. All right, let's shift gears now and talk about the tech world. The annual CES conference is going on in Las Vegas, and it is just generating a massive amount of buzz and long-term optimism, all centered around one thing: artificial intelligence. We're hearing this really consistent vision from all the big players. Lenovo's CTO talks about this deeply interconnected future, where all the AI models, all the devices just work together in harmony. And NVIDIA's CEO, Jensen Huang, he's right there with him, pointing out how AI is letting us tackle problems that used to be impossible and get them right on the first try. It's a huge claim. And Samsung's president really just sums it all up perfectly. It's not just that AI is getting better, it's the speed. The speed of the advancement, the speed of adoption. It's unlike anything these industry veterans have ever seen before. So with all this incredible long-term excitement, why are tech stocks looking a little shaky right now in the short term? Well, it looks like the unbelievable rally we've been on might finally be taking a little bit of a breather. After what was literally the best start to a year ever for Asian stocks, we're seeing a pretty natural pullback. Some of the technical charts are flashing overbought, which is just a fancy way of saying prices went up too far, too fast, and might need to cool off. It just seems like the market is taking a second to catch its breath and digest those massive gains. So we've got these geopolitical shocks on one side and a tech rally that's cooling off on the other. So where does that leave the wider economy? Well, to figure that out, we've got to try and get inside the head of the Federal Reserve. And one of the best ways to do that is with the CME FedWatch tool. It's pretty cool. It basically looks at the futures market to tell us what probability traders are putting on the Fed's next move, whether they'll raise, lower, or just hold interest rates steady. And right now, wow, the signal could not be clearer. The market is betting big. We're talking an 82% probability that the Fed is going to keep rates exactly where they are. Hardly anyone is betting on a cut or a hike.
That suggests a really strong consensus that the central bank is just going to wait and see.
And speaking of that wait-and-see approach, what the Fed decides to do next is going to be heavily influenced by the economic data that's coming out this week. Based on the upcoming schedule from investing.com, the next few days are going to be busy. We're going to get a look at the housing market, a preview of the big jobs report with the ADP number, and some really crucial data on the health of the massive services sector. Plus, the JOLTS report will give us a really good idea of how tight the labor market still is.
And this all brings us to the single biggest question hanging over the market right now. We've got these external shocks from geopolitics, we've got a high-flying tech sector cooling its jets, and we have a ton of data coming that could change the whole economic story. So the question is, can the market's underlying optimism actually hold up through all of this?
This video is automatically generated by NotebookLM, an AI-powered tool. The reference sources used in the summary are listed in the video description. As this content is AI-generated, there may be errors in proper names, pronunciation, or unnatural speech. This video does not provide investment or trading advice. Please make investment decisions at your own discretion. Thanks for watching. Don't forget to like and subscribe.